How do you, whoa, gotta start all over there. Wait a minute, my tongue's getting in the way. How are you doing, friends? This is Ernie with 0 Days to Expiration podcast. And this is episode number 95, entitled Back to the Future. Zzz. I wanted to say Back to the Future, the movie and all, but it is futures that we're going back to. And so what I'm going to talk about today is the decision in our service to focus more on options on the futures when doing the zero DTE. And I know that, a lot of people are really focused on SPX, the options on the SPX for zero DTE. And the reason why they're doing it is because it's so familiar. It's familiar like stocks, and options on stocks are familiar. You can trade them during regular market hours. They have 100 multiplier. In other words, one contract equals 100 something of something, like 100 shares. And it's all, nice and tidy. But there are problems with the SPX, and particularly with people that have small accounts. First of all, the SPX and the options on it, from a margin point of view, it's pretty big. It's a big contract. The other problem is that if you want to day trade this, and zero DTE trading is in fact day trading, and now that they've gone to 5 days a week, that's day trading 5 days a week. If you want to day trade, you need to have at least a $25,000 account. Otherwise, you're going to be tagged as a pattern day trader. And nobody wants to be a pattern day trader. Because if you get tagged as a pattern day trader, then you have the distinct possibility that your account will get shut down for 90 days. And that's not good. Who wants to be put out of commission for 90 days? Nobody does. Now, there are ways to work around this, and people have become very clever in their ways of working, but it's all just a cluster F, right? That's what it is. It's a cluster. Wait a minute. I got to make use of this new facility I have here. It is all a cluster. Did that work? I have to check that out. So I have this new audio tool here. Got to find out if this actually works here. No. That certainly wasn't it. There we go. It's a cluster. There we go. Perfect. So what I meant to say is that in order to get around being a pattern day trader, you have to do things that are abnormal. For instance, we came up with this whole technique of, let's see here, this whole technique of doing kind of like a hedge trade where you would do the exact opposite trade to zero out your SPX positions so that you could let it ride right into expiration. Therefore, you wouldn't get tagged another pattern day trade tag or whatever it is, another hit, because you only get 3 of these in any 5-day rolling window. And that's not good, especially considering that if the zero DTE is 5 days a week, that certainly wouldn't work if you wanted to trade all 5 days. So anyways, those are mainly the reasons, but there are other reasons as well. The SPX has no volume. Without volume, how can you have any meat without your volume? You can't. Without volume, you can't do any kind of analysis on zero DTE. So all of those reasons make SPX, the index, options on the index, an inferior partner in this thing that we do in trading the zero DTE, 0 days to expiration, the very final day of expiration. It's working against us. We're basically treading uphill when trying to work with the SPX. It only trades during market hours. That's extremely limiting. particularly when you have something available to you like the futures. The S&P E-mini futures trades 23 hours a day, 5.5 days a week, has volume. It's smaller, so it's easier to manage. There's only really one distinct advantage, and it's not even an advantage to tell you the truth. There's only one distinct advantage. Maybe two. But the one distinct advantage I can think of is in terms of expiration. The SPX is cash settled. So from that point of view, it's easier for a trader to deal with. Where the E-mini S&P, you can be assigned a futures contract. And a lot of people don't want to deal with that. So, these types of, I guess, inconveniences to some are actually features to other people. The idea that you can be assigned can actually be a feature to somebody who is a futures trader. But for someone who is deathly afraid of futures, it is the boogeyman. Of course, there's a very easy way to avoid ever being assigned a futures contract if you're doing 0 DTE with E-mini futures. And that is simply to close your position. Close your position before it expires. It's really not that hard. It takes, let's see. Let me demonstrate. Well, it's hard to demonstrate here on a podcast, but imagine that you can hear this. Hold on. I just pushed a button. I'll do it again. I just pushed a button again. That's all it takes. Just push a button. Push a button, and your problem is solved. I guess there is one other advantage that the SPX has, and I guess this is situational, and that is the cost of the contract itself, the commission cost. Commissions on options on the SPX are quite a bit lower than commissions on options on the E-mini futures by about as much as 6 times, I think, and as little as 2 times, depending on what broker you're with and whether or not you have high volume discount, etc. So that can be an issue too. But even that really isn't an issue for us. It isn't an issue if the difference between the types of returns that you're going after and the commission itself is a very large disparity. So let me illuminate. Allow me to illuminate. Most other 0 DTE services, they trade the wrong way, right? And I can say that. I mean, okay, it's kind of a judgment, but yeah, they trade the wrong way. They trade with the risk in the wrong place. In other words, they trade with huge risk, going after tiny little profits, potential profits. And so therefore, the commission that they pay relative to the amount of profit that they're going after is relatively close. So they need to trim their costs as much as possible in order to maximize the tiny little risk, the tiny little profit, that they're going after. And so for them, it makes a huge difference to trade the SPX as opposed to the futures. But with us, because we trade it the right way, where we take tiny little risks and going for outsized profits, the size of our profits, even our average profits, are 10 times the size of theirs. And so now the difference between the commission and the profit is very wide. It's very wide and it's just not comparable. So in other words, when you're trading the wrong way, your commissions can consume, if you're doing futures, maybe 20 or 30% of the cost of the trade, and take 20 or 30% out of your nut, right? And that's tough. I can understand why someone would not want to trade futures, trading 0 DTE the wrong way, like with iron condors and stuff. But with us, it only ends up being 3 to 5%. Maybe on a bad day, it's 10 or 15% on a really bad day. But that happens very, very infrequently. right? So again, not a problem. So all the problems are not problems. Yet these are the two primary things that send people over the hill, over the edge. Apoplectic, nutso. I think the other problem is probably the stigma associated with futures. And some people have tried futures. Other people have steered free of them because they've heard all these bad things about them, that they're really, really leverage heavy, and you can lose your shirt. And these are all true statements. All of these things are very true. But again, for those people where those are detractors, to other people, those are features. And with a professional trader or someone trading zero DTE the way we do, the 0-DTE way, those are features. Futures are not scary. There's no difference between how you trade a futures contract with options and an SPX. Yes, there are fringe differences that you have to be aware of, just like anything that you trade. So, for instance, you need to know when there's expiration of a futures contract, right? You have to know that once a quarter. No big deal. They both expire at exactly the same time every day, 4 p.m. The big difference is that I can open a futures contract just about any time that I want, including 1 o'clock in the morning, 6 o'clock the night before, 8:30 right after economic reports are released. I can't do any of those things with futures on the SPX. I'm sorry, options on the SPX. Huge, huge, huge advantage. Now, when I first started this service back in April of 2021, I did it, it was kind of out of spite. I had been trading 0-DTE for a while. I thought I would learn a little bit more about it. Little did I know that I was going to learn a lot, but not the things I wanted to learn, and joined another service. This was before my service existed. And I was disillusioned with the way that they were trading it, taking these huge risks, trying to center iron condors on price early in the morning. They were very formulaic. And they had to put stops while trading options. Can you imagine that? Placing a stop while trading an option. That is antithetical to what options are all about. Anyways, they would put stops because they would have such huge potential risk of wiping out your account or wiping out profits for weeks and weeks, because you're going after this tiny, tiny little bit of profit potential and taking these huge outsized risks. So you had to set stops. I thought that was crazy. So I said, there's got to be a better way. I said, what if I just turn this whole thing up on its end and put it upside down? And they were trading SPX at the time. And I said, oh, fine, I'll trade the SPX and I'll do this. And so instead, I came up with a way where you could take very, very little risk, tiny, tiny, tiny little risk with huge upside potential. Never, ever are you in risk, in peril of having a large loss event like you have with the way they do it. Ever. You're not anxiety ridden. You're not biting your nails. You don't have to use stops. And now my returns are on the low end 2, 3, 10 times theirs on the high end. And every once in a while, I can pin a trade and literally be 2, 3 orders of magnitude bigger than their best day. And we never have the drawdowns that they do. So I thought this was really cool. So I started showing them these trades. And the owner of the service was getting a little upset with me because I was kind of taking over and people were following what I was doing and saying, oh my God, this is just unbelievable, Ernie. Can you show me more? And so then he kicked me out of the service. And I said, well, screw this. I'm going to start my own service. And I'm not going to do it with SPX. I'm going to do it with futures because futures are cool. And I'm going to show them how you can take a small account. I took a tiny little $3,000 account with scary futures and show them how you could build that account into something substantial. And over the course of 9 months, I took that $3,000 account and turned it into $9,000 with very steady. And now, admittedly, in the beginning, because you're dealing with a small account, and this is the same with any kind of trading, when you have a very small account, there's only so many different types of strategies that you can do in terms of entering and exiting a trade and position sizing and so forth. You're limited. So your account equity is a little bit volatile in the beginning. But once you catch a groove and you get some good wins and you build it up a little bit, those types of problems become diminished. And then maybe when you take your $3,000 account to $4,000 or $5,000, now those problems almost completely go away. And then it's smooth sailing. But you never have the kind of drawdowns that you have in the other way that they trade. So I showed that by using futures with a small account, anybody could do 0 DTE and build their account. Now, the really cool part of this strategy, the way we practice it, is that you can take any size account. It is infinitely scalable. You could go from a $2,000 account, essentially a 4-figure account, to a 9-figure account. Same strategy, same method, same asset classes, everything, and just as easily trade it. The difference is, as you get bigger and bigger, you can go to smaller and smaller position sizes relative to your account equity. And you have all the same benefits that you have as a tiny trader, as a large trader. No more account anxiety, no more position anxiety. Not worried that you're going to blow up your account ever because you're trading so small. And even with a big account, you could trade with, I hate to say this, virtually no risk and grow that account in a substantial way, easily outpacing the market 2-3 times. I'm sure that there's a limit. I'm sure that, at some point, I don't know, maybe if you had a 9 or a 10-figure account, you're going to start upsetting the market a bit. But let's face it, none of you that are joining my service has a 9 or a 10-figure account. So there you go. We're going back to the futures. We're dropping the SPX that we have been doing since the beginning of the year and going back to what we first started out with, the E-mini S&P futures to trade the 0 DTE way. Back to the future. Zzz. Hope that floats your boat. We'll see you next podcast. Peace to you all.